now like to welcome everybody to the Q&A portion of today's event. So thank you, everyone. Let's move on to the Q&A. We're going to start with a question. I think this might be for Phil Brown. A lot of people are trying to break into the battery market. What makes you think you can be competitive in this space?
Thank you, Peggy. That's great to start with an easy one. So what makes us think we can break into this space? Well, in our presentation before, we are a global player. We're in every geography around the world. We're the only supplier that can work with our partners and customers in every geography, irregardless of where they want to do this. We also have, as well, a great history in phosphates. Lithium iron phosphate is a phosphate. We've been producing phosphates for over 140 years, and we have a lot of technology in that area. And specific to lithium iron phosphate, since it's new to us, we've picked a very experienced partner from a technology standpoint with Elise, who has over 15 years of experience in producing lithium iron phosphate and highly recognized in the industry. So with those key components, we feel very confident about our entry into the LFP market.
Okay, excellent. We have a couple of questions here, several pages actually. Let's start with why. It's from Joel Jackson. Why is the Growing Solutions organic growth rate from 2022 to 2027 growing at what seems to be less than GDP? How sensitive to commodity prices is this segment?
So first, we believe the organic growth is higher than the growth of the market. And the reasons for that is that first, we have a global presence in all the major markets. We grow organically in China and India. We are doing great in Brazil, and also we are very well positioned in Europe. And I believe that based on our vast portfolio and some differentiated products, and also the strong pipeline that we have, we'll be able to outperform the competition on that.
Maybe I'll just add that in terms of profit margins, when we look at 2022, which is an extraordinary year, then we see profit margins of well over 20%. That's not the plan. The plan is to get to about 18% EBITDA in 2027. So that means that in a normal year, we would be tracking around 15% as of now. So yes, there is an impact of commodities. The underlying business is growing margin considerably over time.
Excellent. Next question up. This would probably be for you again, Elad. Now that you've integrated Brazil, what else do you need to add to your specialty fertilizer portfolio?
So I think one vector that we have already started to develop and invest in is the ag biologicals, like biostimulants, microbial biostimulants, and new micronutrients. I think this is a developing vector. And also to increase our investment in nutrient use efficiency solutions. In some areas, we are the best in the industry. Some other we need to invest more. And I think that will bring us to the very good portfolio.
Excellent. Ron, I think this would be for you. How important, Ron and Raviv, I would guess, how important is digital to your targets and strategy? And how big can this business become?
Okay, so maybe I'll start. In terms of ICL strategy, the way we track new innovation is short-term, medium-term, and long-term. Short-term is how we manage the next quarter, the next year. Mid-term is new product sales, which we measure according to the contribution after 5 years. And long-term, we track big initiatives over 10 years in terms of future EBITDA expectations. So in the case of digital solutions or data-driven solutions, they come into the long term, which means it's not something that is going to move the needle in ICL in the next few quarters or in the next year. They will have Agmatics and other parts of the digital business will have significant sales in terms of new product sales 5 years from now. Still won't be very significant for ICL, but over 10 years, if and when we achieve the goals that Ron presented, it will be a very valuable business 5 years from now, and we'll also know that we can take it into account into our short-term and medium-term goals. And Ron, if you want to add to that, please.
Yeah, thank you. Thank you, Raviv. I think we are building a digital business in ICL. It will take time to build it to be significant in the P&L of the company, but the revenues that we are already generating and the impact that we are generating are significant for us, for the digital business. And we are definitely seeing very positive progress in the recent years and also in the upcoming years. And we definitely believe we can reach the value that we're talking about.
Okay. Phil, I think this would be for you. In the phosphate specialties in St. Louis, where do you obtain the phosphate or other materials and minerals you're going to need for the LFP batteries?
Sure, thank you, Peggy. So one, as we talked about, we have a global footprint around the world, and we produce and are back integrated into a number of different places around the world. So we have our own back integration points in phosphate rock in multiple places around the world. We also have hybrid models that we operate where we convert intermediate materials to further downstream materials, and we rely on strategic supply agreements as well with a number of players in the market. And we leverage our back integration and vertical integration with those. When we talk specific about LFP, phosphate, I think that's pretty easy. I don't know that we need to spend a lot of time on that. When we talk about iron, that's one of the very nice things about lithium iron phosphate compared to some of the other cathode active materials. Iron is a very prevalent material. We have a lot of it in a lot of different regions around the world. That's the beauty of it. It's one of the advantages. When we talk about lithium, you can see every day in the news that there are challenges bringing lithium to market fast enough. There's plenty of lithium around the world. It's a matter of timing. And in lithium, we're working really in a unique model where we're leveraging not only suppliers for ourselves, but also our partners and our customers who many times as large consumers of end products have secured their own lithium and bring their lithium to the manufacturing as well.
Excellent. Raviv, this probably is for you and maybe the larger group, but what kind of M&A can investors expect? Is there a particular industry or region? It goes on. What kind of multiples are you seeing? What kind of multiples are you willing to pay?
Okay, so this really hasn't changed a lot from our previous plan, other than our appetite has grown because we want to accelerate growth and because our financial position is even better than before. We're targeting in 2 divisions expansion of geographic reach and global distribution, as well as portfolio growth. And that's in growing solutions where we aspire to be the market leader, and that means that we want to keep on being aggressive and leverage our success with accretive acquisitions that create additional value and enhance our portfolio and our geographic expansion. And we're going to be even more aggressive than we were in terms of our targets for the next 5 years. And we're targeting the Americas for inorganic growth, so that would be South America and North America. That the same as in our last plan, but maybe in a larger magnitude. And the other division is Phosphate Solutions, where we want to go further downstream, whether it's in the food business, where we're also diversifying to some extent away from phosphate. And now there's the new opportunity, and this is new. There's the new ESS opportunity, which means that we could be opportunistic and go further downstream, and we could leverage that. Also, there are tremendous market opportunities now because of what's happening in markets. New opportunities have become available to us. It's very timely because this is where we're strongest. This is when we're strongest financially. So we're going to look at the opportunities there, and we can also be opportunistic. Now, in terms of multiples, I would say in general that we're only looking at accretive acquisitions. So any multiple that's close to the Close to the company multiple is relevant, even though the company multiple is temporarily very, very low, but we're looking at long-term company multiples. And of course, beyond a certain multiple, it doesn't make sense for us. We were looking at an acquisition in the growing solutions space just recently, and the multiple there was around 16. We thought that there are better opportunities. It was a good target, a great target, but we thought that there are better opportunities in terms of the pricing, and we don't have to make an acquisition. We want to make the right acquisitions, and so we decided to back out based on valuation. And we're sure that others may be willing to pay and then have pain. We're not there. We don't have to do anything. We're enjoying great momentum. So in general, long-term company multiples would be where we're looking at. And of course, we could look as high, as close to the numbers I just talked about. We can be at 10, 12, 13 multiples if there are enough synergies to create the accretion that we're looking for. So again, same as before, but we're going to be a little more aggressive because there are more opportunities, and we want to be more aggressive about accelerating growth as well.
Great. Thank you. Next up is from Ben Thur at Barclays. There's been some pressure on electronics and construction, slowness in the industrial products in the end segments. When do you think these symptoms will begin to abate? Yaniv?
Yeah, thanks, Peggy. First of all, we do feel some headwinds, but it seems they are more of inventory and limited in time. We do see the major trends are still moving forward. Technology is all around us, as I mentioned in my presentation. We all need more laptops. Every plant use more robots and robotics. I see in the plant when I work, I see more drones. We need more server farms. I talk a lot about EVs. EVs are growing, and everyone understands they need much more electronic components. So the electronic trend is still moving forward, and that's for sure. For the limited time, we may see some headwinds, but I think it's limited. And as we mentioned also, we are a diversified division. We have many markets that we are serving. So some markets are a little bit with headwinds. Some other markets are getting even stronger. So we are still very positive and looking forward.
So there's actually an add-on to this question from Ben. He also wants to know, for this segment, why do you think you have a higher portion of customers willing to agree to long-term contracts, even in these market conditions? So what sets ICL apart in this area? And how can you keep this alive?
Yeah, that's a great question, but I think it's related a lot of what I mentioned about our position in the market. Customers are seeing us as a preferred supplier. Mainly the leading customers and leading players are looking also at ICL and ICL IP as a leading supplier. And they want to grow with us together because they see also the trends, every trend that we are looking at, they are seeing the same trends. And they understand that in order to meet the future demand that is growing, they have to have a very strong supplier with excess capacity and with high capabilities. And this is exactly our division is being positioned.
So a little bit of an overlap between you and Phil, potentially, and I know Raviv will know the answer as well. Can we talk about how much overlap there potentially be between phosphates and bromine in the battery markets? You both talked about it today.
So maybe I'll start and you guys pitch in. We're addressing different segments in the market. So LFP, we're working on cathode materials, electrolytes, phosphorus, and industrial products business. We're also working on innovation for the future, so solid state electrolytes based on bromine or battery storage or even recycling is more towards the industrial products business. But We note that the opportunity is very significant, and although we manage it in separate divisions, going downstream there could be some additional synergies, and that means that we're open to the idea in the future of maybe even creating an independent unit, maybe even to the size of a division in the later future. And right now, we're seeing fantastic cooperation between the two divisions, and we're really seeing 1 + 1 = more than 2, because we're working with companies that in the past worked with both divisions, and suddenly they see the strength that ICL can bring to the table when innovation and new business is being built. Please, guys, add to that if you'd like.
I think Raviv, you did a great job of answering that question. But I would just stress that the cooperation between IP and phosphate is extremely strong, and we see a lot of benefit and synergy there. Every time we're having a conversation with a customer or a partner about LFP, we're also talking to them about electrolytes. When Yaniv is talking to them about electrolytes, we're also talking to them about LFP. And so we're sharing a number of things there from business development and connections with those customers as we move forward.
Fully agree. I just want to mention we both see the same industry, and we are both presence in this value chain, and it all linked together, and we make sure that we are working side by side and hand in hand.
So it wouldn't be an ICL conference call if we didn't have a question about commodities. So the question is, if we reduce commodity prices to the levels where they were at in 2020, what would the impact be on your 2027 EBITDA, both for specialties and commodities?
Okay, that's an easy one because we did the math yesterday. We showed a plan to get to $3.6 billion of EBITDA. If we had 2022 prices put into that model, we would get to $5.4 billion of EBITDA in 2027.
Yes, that's
Okay.
correct.
Aviram approves, so it's okay.
Yeah, the other part of the question, though, was we took as an assumption, and we shared it with you in the presentation, that we are talking about at least potash prices of $400. That is somewhat above the prices in the down cycle of 2020. The reason for this is a fewfold. First of all, the forecasts that the people that are following the market are citing. Second, the supply-demand equation. And the third, the developments that we see coming, utilizing it together with the specialty side. So combinations should carry the day. So we believe these are the right figures. If it were to go below that, as much as Raviv said about the upside, obviously it works for the downside as well.
So we have a wrinkle to that question. What if it was 2020 prices?
Yeah, that would take away, that would chip away something to the tune of $500 million from that. If it was all the way down to the low price, it's not mid-cycle, it's down cycle of 2020, then that could potentially be the penalty. Question is this likely, and then for how long also? Because if it's temporary, that's one thing. If it's long-lasting, it's another thing. As I said before, we don't see such a scenario materializing.
Raviv, do you have any final thoughts you want to share? I know I would like to encourage everyone to reach out to me directly. If you have any additional questions, we will be getting on the road this November and December, and our earnings call will be in about 2 weeks on November 9th. It's a Wednesday, and I hope you can join us, but I will turn it over to Raviv.
So I just want to say thanks to everybody for joining us for our Investor Day. We tried to give you an overview of everything that's going on in ICL, and there's a lot going on. We're very excited about the current trends in the market. Yes, there are always short-term challenges, but I think innovation and our strong sustainability-based culture is the way that we feel comfortable in moving forward. And we're very proud that we can return to you time after time, quarter after quarter, and demonstrate to you that we've performed and we delivered on our promise. And all of our management team is very proud to do this day in and day out, and looking forward to meeting all of you soon on our conference call for the third quarter. And we look forward to coming back to you and reporting about the progress on this new plan that we're all excited about. Thank you very much, and thanks a lot to Peggy and to my colleagues for your interesting presentations and for the work of preparation. And let's get back to work. Thank you very much.